You've seen the headlines, right? China's economy is teetering. It's on the brink of collapse. But is that what's really going on? Today, we're going to peel back the layers on that story and ask a different question. Is this an economic meltdown, or is it just a massive, painful cycle that's just too big for us to see clearly? Let's get into it.
Yeah, everywhere you look, there are these dramatic stories about China's economy struggling. They keep using this word, involution, which makes it sound like the country's whole strategy is just unsustainable and about to go up in smoke. But as we're about to find out, there might be a whole other way to look at this.
So this word, involution, what does it even mean? Well, in this context, think of it as a competition that's gotten so intense, it's become destructive. The popular argument is that China built way too many factories making way too many things, and now all that overcapacity is forcing its own companies into this brutal, cutthroat race to the bottom on price.
Okay, so let's first dig into that idea, what we're calling the involution alarm. This is the view that this isn't just a bump in the road. No, this is a full-blown crisis for China's entire economic model, one that could send shockwaves around the world.
And this really lays out the two competing stories perfectly. On one side, you have the common narrative. China's strategy was a house of cards, this overcapacity is a fatal flaw, and now they're trying to dump their problems on everyone else. But then there's this alternative view that says, hold on, this is just a normal downturn, a massive one, sure, but it's a typical cycle, and it was actually triggered by things happening outside of China.
To even begin to wrap our heads around that alternative view, we have to talk about scale. I mean, sheer scale. We're talking 1.4 billion people. That's more than the entire population of the United States and Europe combined. A number that big just changes the rules of the game.
And all those people? Well, they create a mind-boggling amount of economic activity. If you measure it by what economists call purchasing power parity, China's GDP this year is a whopping $33.6 trillion. It's the biggest in the world. So you can imagine when an economy that huge stumbles, it's not just a stumble, it feels like an earthquake. And that gets us to the absolute core of the counter-argument. What if this isn't a unique collapse? What if it's just a totally ordinary economic cycle that's just happening on an absolutely extraordinary, unprecedented scale? A dip in an economy of this size is going to look and feel completely different from anything we've ever seen before. Now, of course, this didn't just happen overnight. This was a meteoric rise, starting with reforms back in the late 70s. But the real rocket fuel? That came in the year 2000, when China joined the WTO. All of a sudden, the entire planet became their customer, and they revved up their production engine to meet that global demand.
So when you grow that fast, and your market is literally the whole world, it starts to change how you think about economics. It fosters this unique perspective that our source material calls the conglomerate worldview.
And this right here is the key idea. The argument is that China doesn't just act like a nation anymore. It acts like a massive global corporation, fighting for market share against other huge conglomerates, which in this case happen to be other countries or trade blocs like the EU. And before you think this sounds totally out there, it's actually an idea that has roots in Western economics. Think of Harvard's Michael Porter, who famously wrote about how nations compete against each other in the global market, just like companies do.
So if you're thinking like a global company, then all that overcapacity we talked about, well, it suddenly looks completely different. It's not a mistake, it's a strategy. You're building your factory floor big enough to serve what the source calls tiansha, basically the entire global market. You're trying to become the supplier for the world.
But here's the billion-dollar question. What happens when your biggest customer suddenly starts closing the door on you? Well, according to this argument, that's precisely the trigger for the involution we're seeing now. And that trigger came in the form of trade barriers, things like sanctions on what they can sell, tariffs on their goods, and this protectionist strategy you might have heard of called small yard, high fence. It's all designed to limit China's access to markets and key technologies. And the fallout from that? It's huge. Suddenly, all those factories that were built to supply the world have nowhere to send their stuff. It all gets backed up at home, creating a massive pileup of goods. And that's the involution, this brutal internal price war where companies are just slashing costs to survive. Okay, so we've got two very different stories here. One's a story of an epic collapse. The other's a story of a massive, painful cycle. So how do we figure out which is closer to the truth? Well, as always, let's see what the numbers have to say.
I mean, let's be real. If an economy was truly falling off a cliff, you'd expect the world's top economic institutions to be sounding every alarm bell they have, right? So, what is their official verdict?
And here it is, 4.8%. Now, get this. Despite all the doom and gloom headlines, the World Bank recently revised its 2025 growth forecast for China upwards to 4.8%. You don't do that for an economy that's supposedly about to implode.
But that number by itself doesn't even tell the whole story. You have to put it in context. When you line up China's projected growth next to the forecasts for the US and the EU, well, the picture becomes incredibly clear. Even with all these massive headwinds, China's economy is still projected to grow at a pace that absolutely dwarfs other major economies.
So, where does all this leave us? The big takeaway here is that maybe, just maybe, the simple collapse narrative doesn't quite capture the whole complicated picture. Maybe we need to rethink it. This alternative logic really boils down to 3 key steps. First, try thinking of China less like a country and more like a massive global company. Second, remember that its huge industrial base was intentionally built to serve the entire world market. And third, see this current involution not as a final collapse, but as a severe and predictable downturn in a cycle, one that was kicked off by a trade war.
And that leaves us with a pretty wild thought to chew on. If nations really do compete like these giant corporations, it forces you to ask a much bigger question. What's the next huge disruption in the global market going to be? And who's going to be the one to cause it? Something to think about.